Moving averages are not external secret that will make you profitable as a trader. Profitable trading is about utilizing profitable technical factors, which can be indicators and price action, to create a perfect trading experience which will definitely play out for you over time as far as trading is concerned. This is Soji and you are welcome to Soji Forex. In this video, you will be learning about moving average and how to make profitable trading entry using this moving average trading strategy. It is simple enough for every beginner to use, and I use this same strategy personally as well. So if you are coming across our channel, please do not forget to hit the like button, share the video, subscribe to the channel, turn on your notification bell so you'll be the first to get notified whenever I publish our main video. So looking at my chart, we have two moving averages, and the first moving average is our moving average period 25. The shift is 0. The method is exponential. You apply to close, and for me the color is black. And then the second moving average is moving average 50. Shift is 0. It is exponential. Apply to close and you save. If you have done that, your chart will be looking like this, just as mine. So on this chart we have two moving average. First we have our 50 EMA, which is the blue line you are seeing is the 50 EMA line. Then the second line you are seeing is our EMA 25, that is exponential moving average 25. So basically the 50 EMA, we use it to determine the immediate trend of the market. We use the 50 EMA to determine the immediate trend of the market. Then we use the 25 EMA to determine the strength of the trend per time. It's used to determine how strong the trend is. And whenever you are in a strong trend, the price will always be moving above the 25. Establish that, how do we make entries? What are our checklists? Our checklist is for us to know the behavior of price around the zone of the moving average. So basically this moving average will do two functions for us. Number one is for us to determine the trend, which is what the 50 EMA will do for us. The 25 EMA will help us to determine the strength of that price of the trend per time. Of course, we have established that a strong trend will always be above this moving average. And you must know that this strategy is not suitable for a ranging market. Okay, so trend indicators are not suitable for a ranging market, so you must establish that. So the first thing you want to do first is that you want to see these two moving average crosses each other, just as we have here. We have this cross of the moving average at that zone, so we want to see the EMA cross at this zone, which is our first signal. And when we have this EMA cross, of course there must be a certain price behavior, which is what happens here before this EMA cross. So we are not just trading the indicators in isolation. After having this EMA cross, we will pick up a trend line and connect from the point where this EMA cross, the first low, to the EMA cross. So we'll connect our trend line in this order. okay, which has proved to us that we are in an uptrend. All right. Now, having established this, and of course, we've talked about that we need a 2 point to connect trend line. We say we need point A and point B. And this is exactly what we have got. All right. So having connected that, what next is our checklist? We want to see the cross. Then number 2, we want to know the trend. And of course, price moving above the 50 EMA established to us that we are in an uptrend. Then condition number 2, we want to see the price pull back to the EMA. Now we want to see price pulls back to our moving average. And just as you can see here, after we have this cross, price moves here, and you can see now that price pulled back from here to this EMA. So price can either pull, because we are in a strong uptrend, price will pull in two ways. Price can either pull to the 20 or to the 50 EMA. Alright, and in this case, price pull back to the 50 EMA, to the 20, 25 EMA, I beg your pardon, price pull back to the 25 EMA, give us a candlestick pattern, and price pulling back, that is our first. We say we want to see a cross. Second, we want to see price above it. Thirdly, we want to see a pullback to either 25 EMA or 50 EMA. Then another thing, we want to see where price, we want to see a candlestick pattern in those areas of the pullback, which is what we are seeing here. So practically we are having a pin bar, which is a candlestick pattern. Then once we have that candlestick pattern, we'll pick our horizontal line, place it below the candlestick. We want to see if we have had any, is this zone, has it been an area of support before or a resistance? What exactly is this zone? Or is it a previous order block? And if you trace it to the past, you see that this is actually an area of support. We have a touch there, and looking at here too, we have a rejection here. So this zone is actually a previous support zone. And since we have established this and have this candlestick pattern, what next we want to see is that we want to see a follow-up candle, which is this other bullish follow-up candle of this our pin bar, and then you make your entry. Your stop loss is below the 50 EMA. Stop loss is always below 50 EMA. Price plays out beautifully, and you can see in this second scenario, price pull back. In this time, price pull into the 50 EMA, and after that we have, this is an evening star formation. Then we have this rejection, which is more or less like an engulfing candle. Then we have a follow-up candle. Then we have our entry, and we have our stop loss below this zone. And as you can see, we have a live trade running from this. Okay, and here again we have this pullback to our 20 moving average, and when this price put to our 20 EMA, it gave us a pin bar. After this pin bar, I always wait for a follow-up candle, and here is the follow-up candle. Upon the close of it, I make my entry, and you can see how price is moving. This is another entry. Okay, that is why I break even to move my stop loss here. This is another entry, and here is another entry, and you can see how this is playing out beautifully. So it is simple and it is straightforward. When you do the opposite for a downtrend, you can see this is a downtrend. You can see we have this cross of the moving average here, and we have this pullback. Remember, we are treating the moving average as a zone, okay? And secondly, we've established that whenever you get this, immediately after the cross, you will pick your trend line and draw it, so you are not trading in isolation. And why you are not trading in isolation is because you know that there is a tendency for price to break out of your moving average but still remain a downtrend because it has not break out of the trend line. Just as we have here, this is another entry. You can see this, it's actually break, but there is no cross and it gives us a bearish engulfing candle and it's played out. Actually, this is a fake out just to take liquidity before anything else. So don't intend this video to be long, and I believe you are getting value from this video. Please do not forget to like, share and subscribe.